Alright guys, welcome back to the channel. In this video I want to teach you a very simple technique for entering high quality trades. It's one of the simplest strategies that I know, but is one of the most powerful. I know many traders that make a full-time income just from using this one strategy, and I'm going to share it with you here and how you can really make it as high a probability as possible. The great thing about this strategy is you can make it ultra conservative. That obviously gives you least opportunities or less opportunities, but gives you a high strike rate. And then you can strip back some filters to make it a bit more aggressive to suit your personality and your lifestyle, and give you more opportunities to then kind of find that sweet spot with the reward to risk ratio, your strike rate, and the amount of opportunities you get as a trader. And what I'm going to do is I'm going to share with you two examples. One is a hindsight, so I can show you why this, how this works. And that really came off of a conversation that we had in the live room this morning when a trader asked me about this particular setup. And then I'm going to share with you an opportunity that's on the radar right now that you can then go and watch play out to see what happens. And then I'm going to explain to you some kind of nuances between the two, and hopefully by the end of this video you'll have some new valuable information that you can apply to your trading. So let's get stuck in. So the conversation that started in the live room this morning, this trader asked me if a certain double top was valid, and he said, and I said, where is the double top? And he said, well, it's in the middle of the move. And I explained that you really only want to start looking at double tops when they're at the top, when they're at major structure resistance, because that's going to give you the highest probability. But the double top isn't the first thing that can give you clues as to there will be a double top. The double top's more of an entry. And I want to kind of walk you step by step through how we can start drilling down and building out a case for entry using a double top that will provide us a high probability setup. And it is very simple. So grab a pen and paper and we'll go through this example on the pound dollar. So look, this is the candle we're paying attention to here. I'm going to draw this on very slowly, step by step. And yes, this is hindsight, but let's just pretend that this is in real time. Okay, so what we're going to do is we're going to build a story as if we were looking at this in real time, and we're going to be analyzing this market to see the clues as to why we might want to look for a double top at this level. So the first thing I'm looking at is the move previous. We've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 bullish candles in a row. This is a bullish, strong bullish market. And on the 13th candle, we've seen this rejection. So you can see the bulls pushed all the way up to 142.59 and then got rejected by the bears and closed down at 141.34, giving us this really nice high test candle. Now at that point, I'm interested. And before that, I'm already looking at where we're approaching, because we know these bullish trends don't go on forever. We know that we're going to see some exhaustion at some point and a correction and a pullback. So what I'm looking at is the levels first of all, and I can already see that there's a 142 flat level, so we've got that even handle number there. But let's just draw a horizontal line on where we closed on that market, right? So we're going to draw a horizontal line on, we're going to zoom out and look at the previous market's reaction to that level. Okay, so if we just go back to the most recent level where we were tested that level, we've got 1, we've got 2, yeah, okay, it's quite good. Then we've got 3, 4, 5. You can keep scrolling back, you're going to see multiple tests of this level. If you scroll back, you're going to see that we tested here, right? We closed here, we tested here. So it's quite a decent level of resistance, right? So if it's a decent level of resistance, and we're seeing just recently that we closed, we tested that level and we found some rejection at that level, the next thing to do is to start looking at, well, okay, well, we've had this rejection candle. What other indicators, or how could we start looking to involve ourselves in this rollover? And the first thing, the best thing to do would be to drop down to the trading time frame. So this is the daily time frame. I'm now going down to the 4-hour. And you're going to see that we had a rejection there. We had another rejection candle right here, right? But not only that, we started to put in this time symmetry and price symmetry double top. Now the double top means that once we've put in that initial test, which we've demonstrated here, we want to look for a little pullback and then a retest of the high. Now the high of that double top is right here. Okay, we want to test this zone here without breaking and closing above the high of that level. All right, so let's just color this in a different color so it's nice and clear. Let's go for yellow. So we want to test this yellow zone, but we don't want to close above the high of this yellow zone, which would be 142.46. And as long as we can put in that V shape up there and get that valid symmetrical double top, we can then start to look for entries. And as long as we don't break and close above the high, that's valid and we're good to go. Now, what else can you do to filter this so that it's even higher probability setup? Well, you can use things like RSI. If you've got divergence on the RSI, in fact, let's bring, well, we can see the RSI. Let's see if we can, let's just drop, I've got the RSI on this chart here. You can see right here, as we put in equal tests of that high, we actually put in bearish divergence on the RSI. We've got really nice divergence there on the RSI. So equal test of the high in price, divergence on the RSI on the RSI. So already we're starting to see some more filters. You might look for overbought conditions. You might look for a 3-bar reversal or a doji or some other kind of filter that you add to the confirmation of this high probability trading opportunity. But then look, we get the double top here. We close out right here at 140.140, and then we enter next bar market and we're looking to take targets down at structure. So in this case, structure really is down here, right? So we're looking at targets. If you're conservative, right here. If you're a little bit more aggressive, this channel here on the daily time frame is really where I'd have my target limits. So you can see we rolled over, we hit target 1, and then if you was more aggressive or you was trailing stops maybe, you hit target 2s down here. So that is how we look at something, read the story of price, then drill down, look at high probability double top, and then look for an entry, and we use that for an entry. Now this is an extreme high, okay? So now what I want to share with you is on the euro dollar, where we've got a similar situation, but we're using it in a bearish move, okay? Again, so you can see recently on the euro, we've put in these new lows, new lows, new lows, and we're seeing a pullback. Where are we seeing a pullback to? Well, we're seeing a pullback to 119 flat, right? So again, even handle number, we draw on the horizontal line at market. We saw the rejection candle here as well, which is, for those of you guys who trade the daily chore, that is the daily chore signal as well. So you're already short, potentially already short if you're filled, but we've got that rejection candle there. Now we can start looking again at structure, looking left. 1, right, 2, let's see how many more, 3, 4, right, 5, again 6 before we broke to the upside. It then came down, we found support. If you scroll left, you're going to see more and more tests of this level, right? 1, 2, right, and you can go on and on and on. So really, if you've got 4, 5 tests of a major structure level, that is going to have some significance, particularly if we're using a lower time frame for entry. So now we've got this rejection. Now we can start dipping down and looking at entries. Now you can see already that we've already put in an initial test, and we've seen this dip down, little V shape, time symmetry, price symmetry, and we've actually tested the high of this candle. So look, if we're looking at the high of this candle needed to be tested for the double top second test, we've actually tested that right now. Okay, so do we have RSI divergence? Let's just check on the chart that I've got RSI on. We've got the double top. Yes, we've got divergence here as well, and we was overbought on the initial test. So overbought, over 80 on the initial test, divergence on the RSI. So great, tick. Now we can start waiting for the entry. Now what's the entry? We just have to wait for next bar market. Next bar market. Why do we have to wait for the next bar market? Well, that's important because if you don't wait and we close above this high, then that's not going to be a valid double top and we actually have a higher probability of pushing to the upside. But if we do close below this high and we close in this zone or lower, then this is a valid double top. So hopefully we can test a little bit higher. Let's just say that the market closes here. The stop loss would go an ATR or 1.5 ATR above the high, which is great. And then your target would be at structure. So again, if we look at where the structure level is, this is, you've got some decent room for targets here. And if you're using this as a longer term entry into a continuation, then you could either split your targets and take target 1s at structure and target 2s at the low, or you may take your whole position off at the low, which would then mean that you're getting like a 4-to-1 reward to risk, which is always nice. But I'm always more of the take some profits off, then trail stops to secondary targets and squeeze more profit out of the market. So the difference between this and the one that I showed you is the first one on the pound dollar was at major structure highs, a top at the top. This one is a double top at major structure for exhaustion and a reversal so that we can continue on with that bearish move. Either way, these are going to provide a decent opportunity. This setup will provide a decent opportunity, and this video was really more to do with drilling down. Basically reading price and then drilling down to filter out high probability opportunities, because if you take double tops anywhere in the market, you're going to go broke. There's going to be double tops that form or retests that form everywhere in the market, but this is how to identify double tops with a thesis, with an overall prediction and forming a story of what's going on in the market. So I hope you enjoyed that. Let me know how you trade double tops. If this has been valuable, let me know in the comments, and let me know what strategies you use. Go and test this, use it, go and practice, and let me know how you got on in the comments. And until next time, take care, and I'll see you then.